It's time for UK banks to go legit, says Breakingviews. And for how long can markets defy European central banks? Edward Haddis is Reuters Breakingviews economics editor, joins me. Let's kick it off with yet another consumer rip-off story in the UK. This is for people who bought identity theft and credit card protection, and it seems about a dozen, and I'm looking at about 4 of them now out of this window, financial institutions are involved in this one.
Yeah. They encouraged clients. They didn't sell it themselves, but they encouraged clients to customers to buy this kind of insurance, which was of virtually no value, since actually credit cards are protected against identity theft by the banks, and so this is just a fee garnering exercise there. 1.3 billion pounds looks like the fine they're going to end up paying, and the blot on their already soiled reputation is just, well, another blot.
So, and of course, this has got everyone, your journalists included, calling for proper reform. Yeah. And proper reform takes what shape, do you think?
There are 2 issues here. One is an attitude issue, which is these are not our customers, these are our meat. These are profit-offering individuals and companies that we just have to milk and squeeze them as much as we can out of. That attitude has to change. Yep. And I'm not at all persuaded that we've seen any change. Every day when I get a NatWest free balance transfer email, I think, you really have not changed your ways. And the other thing is that there is an economic argument, which is that these banks have, by tradition, always offered free current accounts, and it's a quite expensive product. So
start charging for those accounts.
If you start charging for those accounts, then you at least take away the economic logic for saying we have to get money out of you somehow. The problem with that, of course, is that no one bank can do it by itself. They all have to do it together. Yep. They need the regulator to help them to require it.
So the regulator needs to coordinate and time a move.
Yeah, and you need to help the poor. Maybe they get free banking, but that has to be, again, arranged in a regulatory way.
Okay, good. That's the first story. The second is a piece about the markets in general and how they seem to be at loggerheads or fighting this loose policy from the central banks, and for how much longer this status quo can continue.
Yeah. I mean, the central banks do something. They have monetary policy, and the whole purpose is to encourage banks to lend, encourage consumers and businesses to spend and invest. They do this by having very loose monetary policy. Now, the Fed is starting to tighten verbally, as it were. It's announcing that it's going to soon reduce its purchases. Both the UK Bank of England and the European Central Bank are still on maximum loose mode, and yet markets are already tightening financial conditions. The currencies are rising.
Yields are up, yep.
And the cost of borrowing is actually up. So what are the central banks going to do? Well, right now they're going to watch. But what Swaha, our writer, is saying is that they can't do this forever because, in effect, the markets are undermining, undercutting, fighting against what they're trying to do. And so they might have to make policy more accommodative.
And how quickly do you think this will take?
Well, how quickly? Don't know. Maybe a few weeks, or maybe a month or 2. But you can't go forever. The first thing you do is very cheap, which is you say, give words. You say, this markets have it wrong. If they don't get into line, we'll do something.
Right,
and
then you have to.
Well, they're starting with that, but then after that comes action.
Looser policy.
Which is, again, looser policy. Eventually, it's putting yet more money into the system.
All right. We will no doubt be talking about that one again. Edward, many thanks for that. Edward Haddis of Breakingviews. For more agenda-setting insight, watch our US Breakingviews show every day, 12:30 Eastern, 17:30 BST. You can see all the Breakingviews stories, of course, on their website. I'm Axel Threlfall. This is Reuters.